Hi everyone, this is Jared Snyder with Exential Wealth Advisors. I'm a partner and senior advisor here at Exential, and I thought we could talk a little bit today about charitable giving. We get questions all the time from clients about what's the best way to support the organizations that are really important to them, that are fulfilling really great purposes, really great missions. And there are some really great ways to accomplish that, and there are also some ways to give to charities that also not only benefit the charity, but can help you on your taxes, to end up with a better tax position for you as the person giving those financial resources to the charity. So when we're looking at charitable giving, what we try to help our clients do is to figure out the most tax efficient way to do that. Typically, most people, when they think about giving to charities, they think about giving cash. And cash is probably the most commonly gifted asset to charities. Sometimes it can make sense to give cash, but there are also other types of assets that you can give to charities that can actually help you whenever you're looking to reduce your tax bill. So one of the things that you can do is give appreciated securities. Let's say you've built up some investments in a non-retirement account. You've got some individual stocks, maybe some Apple stock, maybe you have some mutual funds or some ETFs that have grown and that you have some unrealized gains in. Let's say you invested $100,000 into Apple stock, and that $100,000 has turned into $200,000 in Apple shares. So you have $100,000 of unrealized gains. Whenever you're wanting to do some gifting, instead of gifting cash, you can actually gift those securities. You can gift those shares of Apple. And then all of that growth that you've had that has been unrealized, because you haven't sold those shares yet, you can gift a number of shares that would equal the amount of financial value that you're wanting to give to that charity. And then two really cool things happen. One, the charity gets the benefit of that gift, so they're receiving the financial value that you wanted to give. And two, you avoid having to pay tax on the unrealized portion of that gain. So you avoid that capital gains tax, which is a really cool thing, obviously, from a tax standpoint. So that's one really cool, powerful thing you can do with charitable giving. Another tool that's out there for you to think about is a donor-advised fund. And all a donor-advised fund is a charity of itself. So it's actually a 501c3, but it's really a conduit for giving to other charities. So whenever you give securities, those appreciated securities, individual stocks, mutual funds, ETFs, you give those to the donor-advised fund, you get the charitable deduction, you get the tax benefit of that gift in whatever year that you make that donor-advised fund gift. And then the donor-advised fund receives those shares. They'll sell the shares. It's not a taxable event for them because they're a charity. So they sell the shares, they have the cash sitting there, and then you direct the donor-advised fund for which charitable organizations you want to receive the benefit. And you can spread that out over a number of weeks, months, years, really whatever timeline you want to do that. And so it's a really great way of organizing all your charitable giving in one place. It's a great way of avoiding the tax on the unrealized gain that you might have on some of those winners in your investment account. Another thing that's really cool to do with that is to look at a year, maybe it's this year, maybe it's a future year, where you have a really good sense that your income is going to be perhaps significantly higher in that year. One thing that can make sense is to bundle maybe multiple years of your charitable giving into one year and use a donor-advised fund to facilitate that. So let's say you give $25,000 a year to charities. And let's say that this year you're going to have a liquidity event, something's going to happen, and your taxable income is going to be meaningfully higher. Well, you get more bang for your buck in a higher tax year whenever you do more charitable giving. And so maybe you front load future years giving to that year. You say, okay, well, if I'm giving $25,000 a year, let's give 4 or 5 years of giving to a donor-advised fund. So maybe you give $100,000, $125,000 to that donor-advised fund in appreciated stock. And then you can spread out the giving to that charitable organization over that 4 or 5 year period. You don't have to give it all in 1 year. It's a really, really great way of being able to help the charity that you want to help out and also help yourself out with some tax planning that maybe you hadn't thought of before. I hope that's really helpful. If there are any other ideas, things that are on your mind that you'd love to reach out and ask us, we're always here, we're always available to be a sounding board for you. So if you're thinking about your charitable contributions for this year or a future year, just trying to put all that together, reach out to us, give us a call. We're glad to help. Thanks, hope you have a great day.